Are initial coin offerings the future of investing or just another risky gamble? Join us as we explore the pros and cons of investing in ICOs and help you navigate the world of cryptocurrency investments. An initial coin offering ICO, also known as an initial currency offering, is a popular funding mechanism for cryptocurrency projects. Think of it as a hybrid between crowdfunding and venture capital investment, where a soft or hard cap is set and a token is issued in exchange for the funds raised. These tokens are then traded on a blockchain platform, such as Ethereum ERC20 tokens. Typically, ICOs involve funding very early-stage products or ideas with the aim of attracting investors who believe in the potential of the project. However, as with any investment, there are both benefits and drawbacks to consider before jumping in. So now let's start by looking at the pros of investing in initial coin offerings. Investing in initial coin offerings, ICOs, can offer early investors a unique opportunity to gain access to early-stage companies that may not be available through traditional investment channels. Don't forget to subscribe to our channel and hit the notification bell to watch our latest videos as soon as they are released. One of the key advantages of being an early contributor to an ICO is the potential for increased liquidity. As the project develops and gains momentum, the token's value can increase, providing investors with rapid capital growth and the potential for significant returns on investment. Moreover, depending on the ICO, there can be a vast network of participants and supporters behind it, such as the Ethereum network, which can generate additional buzz and demand for the token. This network effect can drive up the token's value, leading to increased liquidity and potentially even more significant returns for early investors. Initial coin offerings, ICOs, have revolutionized the way startups and companies raise funds by offering a unique feature that allows them to hold custody of tokens without any intermediaries. This means that holders of the private key own the tokens, thereby providing a high level of control and security over their investments. Unlike traditional fundraising methods, ICOs offer a decentralized approach that allows investors to have complete control over their tokens. Comment crypto if you would like us to make more videos like this in the future. This means that investors are not required to go through intermediaries such as banks or brokers, reducing the costs and delays associated with such middlemen. One of the key advantages of ICOs is their limited regulatory scrutiny, which has allowed startups and companies to raise funds without the need for compliance with strict regulations. However, this could change in the future as governments around the world are beginning to recognize the potential of ICOs and are taking steps to regulate them. One of the main advantages of ICO coins is the level of anonymity they offer, which is comparable to that of other cryptocurrencies like Bitcoin and Ethereum. The use of blockchain technology in ICOs ensures that all transactions are secure and decentralized, making it difficult for third parties to access personal information or manipulate the data. Furthermore, ICOs offer a high degree of transparency in terms of how the funds are used. An escrow system is often employed to verify how the funds are spent after the ICO, which provides a level of accountability to investors. Don't forget to like this video if you've watched it till now, as it inspires us to make content like this. This innovative way of deploying capital can offer a hedge against political and economic shocks, as cryptocurrencies are not tied to state-regulated fiat currencies. This makes them a compelling alternative asset for those seeking to diversify their investment portfolios and reduce their exposure to traditional financial markets. Initial coin offerings, ICOs, have rapidly become a popular way for startups and businesses to raise capital without having to go through traditional funding channels. ICOs offer investors the potential for high-risk, high-reward returns, as well as the opportunity to invest in promising new technologies. However, it is important to note that ICOs are not without risks. Potential investors should take the time to thoroughly research any ICO before investing and understand the potential risks involved. This includes understanding the technology behind the ICO, as well as any potential regulatory or legal risks that may arise. Despite the risks, One unique advantage of ICOs is that contributors are often the first users of the utility token. This provides a tangible investment opportunity that is different from holding stock in a company. Unlike traditional stock investments, utility tokens can offer users access to a specific product or service, creating a direct connection between the investor and the technology they are investing in. Furthermore, ICOs can offer investors an opportunity to diversify their investment portfolio, as they can be disconnected from traditional financial markets and economics. This provides a potential hedge against market volatility and economic downturns. Okay, now look at some disadvantages of initial coin offerings. One of the main risks associated with ICOs is the lack of regulation and investor protection. Unlike traditional initial public offerings (IPOs), there are no institutional investors involved in ICOs, and there are no regulations to protect investors. This means that investors need to be very cautious and do their own research before investing in an ICO. Furthermore, the information provided about an ICO can be limited and difficult to verify. As a result, it can be hard for an investor to make an informed decision about whether to invest or not. Some investors may rely on just a few YouTube videos to do their due diligence, which can be risky. Another risk is that products and projects associated with ICOs are often immature, increasing the inherent risk of investing in them. Investors may be investing in an idea without any tangible plans for implementation, which can lead to disappointment and loss of investment. Additionally, the company holding the ICO receives the bulk of the investments at the very start, and there is often little liability or pressure to actually deliver a product. This can result in some projects either exiting scams or withering away in development activity. Exchanges, where the tokens are eventually listed, have limited guidelines and policies to prevent fraudulent activities. Even if the token sale is legitimate and the project is strong, crypto exchanges and wallets are often hacked and tokens can be stolen. Furthermore, if an investor loses their private keys or hackers steal their tokens, there is practically no way to retrieve them. This lack of transparency can be frustrating for investors who have invested in an ICO, as there is no enforceable obligation for a project to disclose its progress. Finally, investments made in ICOs are often prone to artificial pump and dump schemes, where the value of coins can become even more volatile than established high market cap cryptocurrencies like Bitcoin. In summary, investing in an ICO carries significant risks, including lack of regulation and investor protection, immature products and projects, limited transparency, and vulnerability to artificial pump and dump schemes. Potential investors need to carefully consider these risks before investing in an ICO.